Hey traders, what's going on? Jamie Saettele here. It is May 16th, 2018, and this is the Midweek Strategy webinar with SB Trade Desk. So let me know that you can hear me and that you can see the chart of euro right now, although we're going to look at some of the US dollar indices first, and then we will move on to the individuals. Thomas says, it's okay here. All right, great. So we are getting very close, although a lot sooner than expected, to the, what I would consider a pretty major level for dollar in general, based not only on this index, US dollar, but also on DXY. DXY is actually a little bit higher, but here is the weekly, right? And this is that old parallel that was support back in September of last year, and it was also kind of a kickoff for 3 weeks of so-called kind of dollar crash, and now we are right back into that line. It's just about 12,000, and that's also, of course, the November 2016 low. So we're really close, and the 25 line from the bearish parallel is up there too. If you draw a parallel from the high off of the November high, we've actually already hit it. So you could make the case that we've kind of already hit resistance. I would, say that it's proper to say you've already hit a resistance zone, maybe rather than saying you've hit the ultimate final resistance. But we've entered the zone at least. And there are some dollar pairs that I'm wondering if they've actually bottomed. Aussie and Kiwi are pretty interesting here, actually, so we'll remember that. But yeah, here we are, big spot. Here's the 4-hour chart with the same lines, and you can see it's right here. So again, we're within a push, right, of actually getting into that level. Starting to see, obviously, momentum, or RSI, if you will, making much lower highs, but still, remember me, I consider divergence. You need to have price making the new high, but you need to have RSI below the 60 level. So for me, this would not be a so-called reliable divergent signal, although it would be divergent by many people's standards. But I would not consider this a big warning for divergence just yet. So maybe if we get some pullback and then eke out another one, might have that RSI holding above or holding below 60. Something to keep in mind over the rest of the week. But yeah, so we're getting very close. All right, DXY. So after last week, we had this nice little candle and closed under the 52-week average. Thought that would have been enough to get a little more of a pullback here. But within really very early in the week, within 2 days of the week, you'd already put in an outside bar, and we are getting close to the next level here again. It's just above 94. If you go to the daily, right, you can really see how clean it is with the parallel here, center line, midline, median line, whatever you want to call it. That's going to be up there, and then I have it circled all the highs that occurred back in December, really from July to December of last year, resistance before the final breakdown, and now we are coming right back to it. So we have just about retraced the whole thing. You also have the August low in DXY down there as well. So getting really close in that as well. This is going to be more euro, of course, which I guess makes a little bit of sense, possibly, if you're thinking about which currencies might be getting off their ass against the dollar. with the US dollar, right, a little closer to its proposed resistance. You've got, Aussie in that. So maybe the euro extends a little bit lower while, Aussie and maybe pound, maybe yen actually try to go the other way a little bit before, a little earlier than say the euro does. Just a thought there. But bottom line is both US dollar and DXY are getting really, really close to what I would consider kind of make or break spots for this entire move. Okay, let's go to euro then. So with euro, remember we talked last week pretty in depth about the channel, technique, right? So you draw your channel here, you extend it halfway, and that ended up being support last week, last Wednesday on the 9th. We did get a push higher. I was of the mind that you were going into a little more of a corrective process, again, a fourth wave maybe of sorts, and that you'd get eventually maybe get 120.50, 2070, which would have been the 38.2 of this drop, the third wave drop. Of course, as we know now, that was not at all the case, and we only had 4 days up and just straight down the last, starting early Monday. So certainly threw me for a loop. We did stop pretty close to that, that parallel, a couple pips shy of it. We had 120 marked down. High was what, 1996 or so. And we have now actually dropped back below this level, this, extended parallel, which is half the distance. Okay, so from here, would seem a little late in the game for me, at least, to want to be putting out short positions on the euro here, but there are some big levels just below. One of them, so from a horizontal level, you've got essentially the 117.15 area. All right, that is the 2015 high. You can see circled here. And if you scroll across, you can see we kind of consolidated on top of it. And then the final low was back in December of 2017 before you took off on the upside. So you had a low there in November of 2017 and then December of 2017, that same area. So that to me is a really big spot. Now, I don't really have anything, say, on the major slope stuff is actually all lower. So, just be aware of that, we sink into 117-ish and you want to be trying to buy like the exact low or something. I'd be awfully careful and aware that you actually have got more parallels or consideration for support from parallels a lot lower, right? So that's going to be down closer to really below 116. Lows back from October of last year. That's going to be down in, say, the 115.70s. And then, of course, the final trend line from January of 2017 to April of 2017 is actually even lower than that. Now, this is all the confluence of this is kind of in, early June. And that was another reason why I was thinking that we would consolidate a little bit more in a fourth wave here. Even if we were going to go like triangle, we talked about it last week. We talked about maybe going something like this, right? And consolidating in a fourth wave and then puking it out, say, into early June for a low. As it is now, we've, kind of gone just straight down, and you could still conceivably have a triangle. Where's the 127 extension of this leg up? Let's see here. That would be 117.75, which is not that far below where we are, but you'd have to literally turn up right here, right? You can't go any lower. So for me, kind of lost in the dark here as far as a trade is concerned, but do have an idea of where the really big levels are on the downside. And again, they are, just above 117, and then not really until a good deal lower after that. But another thing that I would point out here is that if you go from the March high, you got a 1, 2, 3, 4, working on 5 waves down, right? And if we were to throw in a, proposed wave 1 equals wave 5, you get 1735. It's in that mentioned zone of the 1715 area, or just above 117. So a lot down there. Again, for a trade, not a lot. I was talking with, who was talking to? Kelly here on Twitter earlier, and he had asked about, maybe near-term resistance, and I suggested maybe 118.15, and we did just spike up into 18.20 again. But this decline just looks so mature to me, and it's very difficult for me to get turn and trying to sell it. Excuse me, and trying to sell it. In anticipation of just, more downside. That's just kind of as simple as I can put it. Okay, so for now, euro, I either need to see washout, like serious washout and capitulation, or this thing needs to turn up, and maybe we start to try to consolidate between the 118 and 119 50, 60 area, which would be kind of a possible more mature fourth wave before we go lower into early June. So that's what I'm looking at there. With the British pound, British pound has been really all month. Here we are. This is actually, we're halfway through the month. Kelly says, appreciated. I am making positive pips. Well, congratulations on that. I am happy to hear that. That's a good thing. British pound. We have hit the Jan low, right? And more importantly, I think, is actually the fact that this was the recovery highs post-Brexit. So you can see that was July 34.79, which we're pretty much at now, and then 34.44, right, which is just a hair lower. And we've been in a super tight consolidation since the month, or since May 4th, right? Month actually was right here, but we've been in a very tight consolidation, and I'm looking for us to come out of this. If it's the downside, I think it's probably going to be a false type of move. You've also got, remember this trend line back here? I wouldn't want to forget about this. That trend line, which actually kind of was support here for a move up in March, that if we do puke it out, say the next day or two, I would say that that's a level to be aware of, right? And that's going to be pretty close to the next square root level of 33.83. At this point, it'd be a little lower. If you got there today, it'd be on it. You do have the next parallel down there as well. That was support down here, 6/21, June of last year, and then August of last year. So those are, that's a level that I would circle or write down or whatever. Essentially, if you got there today, it's 33.83. If you get there tomorrow, it's like 33.70. And I'd be interested in fading a move. That means buying it if we got down there. Now, something to be aware of with the British pound here is that you actually we have had a series on the 4-hour chart. We have had this series of divergence, right? So this is when I was talking about the dollar and where the divergence, it is not really there for me because the RSI is still above 60. In this case, you can see that it's actually above 30 on these lows, and that's the magenta dots that are telling you that we're above 30 and at new lows. So you have that here. You had it again yesterday, and we haven't really extended the downside yet. So I'm not, if we can get a move higher, this is kind of one of those things where I think you actually end up If you puke, you want to fade it. And if we rally, I'd be looking at this as maybe an A, a B, and then a C wave flat. Okay. In cable, in which case I don't know if you can get all the way back up to the center line, the red line, but if you actually were to measure the distance here, you'd have a 1618. So if this is A, B, you'd have 1618 of A equals C at 3715, and that is, you know, obviously a ways off, but that's where we were looking for resistance anyway last week. Remember, when we came out of BOE and we actually stopped at 36.15 instead of extending to 37, but those are the levels that I think are, you know, the ones to watch. So again, it's kind of like Euro in the sense that do we puke it out once more and get down to this magenta line, 33.70, 83, depending on when you get there, or are we going to try to turn around and make a C wave higher? That's where my head's at on this, but you know, we need to see some sort of constructive price action in order to try to trade it on the long side, because we just don't have that yet, right? It's just kind of a disaster here. If I were to go to a short-term pound chart, this is a 60-minute chart. You've got the week open up here at 35.48, 200-hour average right here, which was kind of where you stopped on a spike this morning. So I would put that 35.50 area as somewhat of a line in the sand for the puking out downside thing. And you know, if we got a move through there, then I would navigate for a long position, take it up to that 37.15 area. Okay. Until that happens, again, it's very much wait and see if we do get the 33.80s or not. Okay. All right, dollar yen. You already know where I'm at here. We're at a huge, huge spot. And dollar yen's not doing much of anything here today. We did come off and drop into 110, essentially the old highs, right? That high there, 5.2 high, 110.02. Today's low, you know, 110.04. So we've hit that, but we are at the line off of the 2011-16 lows, which, you know, you did see some spiking through that, you know, in 2016 and last year. Or sorry, not last year, this was January and actually February. So if you draw the trend line from the high back in November, you actually get a slightly higher level at around 110.70. So if you do get a final spike higher, then that would be a level that, you know, maybe we can do something that, or we need to see this come off more, right, and show us something, because I'm not trying, this just does not feel weak up here. It's just not, you know, it's not doing anything. And I can't short a quiet market up here, even though you're at major resistance. It's not, you know, appropriate, so to speak, to try and just, you know, sell it because you're at resistance. Market needs to be acting the right way to sell at resistance or buy at support. It's just not doing it. So, you know, that's my little spiel there, but yeah, be aware of where we are, right? We're at a big level, and maybe because US dollar itself, which dollar yen is in, right? I'm talking at USDOLLAR, maybe because that does have a little bit more before you get to that 12,000 level. Maybe you do end up getting up into 110.70 at some point over the next few days before we, you know, roll over. But that's where I'm at with dollar yen, just knowing we're at a huge level. That's the longer term chart, of course. If we go to the shorter term chart, this is the shift fork, right, from here. So the March low, and then the high from the March 28th, and then the low from April 2nd. And you can see that this is followed extremely well. This is actually not the center line. It's like a little offset from center. But the reason being is that this is the one that crosses all the levels. So this was the one that was resistance and then support and then actually resistance again and then resistance again, right? So if we scoot up into that level, you'd be again talking about maybe getting a short position of sorts. Now, if we look at, say, the rally from, if we go down to a 60-minute chart, you always kind of want to see like a 5-wave rally from the most recent low, and I'm not so sure what was this, like an, it's just not there, right? And it's one of the things I say a lot, if you have to really try to do it, to count it, then it's just not there. So I don't see it just yet. Would love to get maybe a pullback and some overlap and then get another high to make 5 up from here, unless this is a 1, 2, 3, 4, 5 and it's really tricky. But either way, you can tell that I'm kind of struggling to see it or to count it, which means that it's not there. If you have to struggle to try to, make something of the chart, then it's just not there. So bottom line, dollar yen's at a big spot, closer to its big, so-called big spot than say euro is, but just don't have a trade there because it's not acting the right way. It's kind of that simple. All right, let's look at, because we just looked at dollar yen, why don't we look at some Nikkei? Why don't we look at some gold? Dagan says that is a nice 40. Well, it's why we had to. All right, I should be back. Can you guys hear me? Here we are with the internet problem again. Yay or nay? Can you hear me? Can you hear me? Okay, sounds okay. All right. Again, sorry about that. We had the same problem last week. All right, so yes, that is a good fork. Again, this is this is the shift fork, right? So it's not a trend line because it's not as steep as a trend line. It's you're moving the the fork back in time and price 50%. So that's probably a whole nother webinar, like an educational webinar for an educational piece. Anyway, let's move on. We wanted to look at Nikkei and we wanted to look at gold because we just looked at dollar yen. So the Nikkei, here is, by the way, the NASDAQ. We did just go into 69.19 right here. So I'm looking for NASDAQ to come off here. The Nikkei is a little confusing right here. We've we've done the thing that we needed to do as far as going through the February high for the flat. The question is, have we made, if you look from this low, and this is what I was talking about with dollar yen, if you look from the low on 5.3, right, you can count a 1, a 2, a 3. Does that make this a 4? And then do we need another push higher in 5? Potentially. I would not, that's what it looks like to me, right? We're looking at a 4-hour chart here. Here's an hourly chart. And if we go a little lower here, we say with the NASDAQ or something, pay attention to those levels in the NASDAQ, pay attention to those levels in the S&P, because you could have support, say, on the 200-hour average, which would be down here, 22.56 or so, about 120 points lower in the Nikkei. So that'd be a 1, 2, 3, fairly deep 4, and then one more, eking out one more high for 5. All right. So it's been an arduous process here trying to get, this flat, this rally from the low in March, which has been a complete choppy disaster. But that's where we're looking as far as, maybe over the next couple days, right? A little pullback with the general market, and then higher for one more thrust. And that would be the same with, you can see the S&P and the NASDAQ. And while I have us here on these charts, we might as well just look at these. So here's the NASDAQ. This is the short-term chart that we looked at yesterday, last night, and we hit the resistance this morning, 69.19. I'm looking towards that 6,800 area, and I said, in the post, you can see how big that area is, just going back this big spike high before kind of the crash in February. Big support here, March 6th, big support here, March 19th, kind of traded around it. So I really wouldn't call that resistance because you did go through it. But you get the idea. You've had big moves off of that level. So that's going to be 6,800. Pay attention to it if you get down there, okay? The S&P. The level here, similarly extremely well defined, and you can see it's 26.82. And think about what we just said with the Nikkei. You can get down to 26.82, hit support, maybe go for one more up into 27.59. These are essentially the two biggest levels in the S&P, to know over the next, I'd say probably the next week, right? So, here's your big, huge resistance levels. I mean, sometimes it's just simple as the best, and just clearly you have huge, huge responses at these levels, okay? Of course, you just also be playing channel lines within the S&P channel from the April 2nd low as well, right? So we're looking at 26.82 and then 27.59. Those are the spots I think that we want to be focused on moving forward into the rest of this week, and probably maybe early next week, but probably just the rest of this week would be my guess. All right, let's look at gold. So gold has been just destroyed. We had talked about getting maybe a 1, 2, 3, 4, and then getting a fifth wave lower. If this is a fifth wave, it's pretty darn violent. So Mahai says you believe first will be under 27, after that higher to 27.60. I do. That's what I'm looking for. I'm looking for a drop in the S&P here, Mahai, to 26.80 or so. It's actually also the yearly open, and then higher into 27.60, and then from there we kind of have to, I guess, reassess. But those are the levels that I'd be looking to trade over the next 2 days. So really kind of a short bias right here, right now, and that would be the case for another 40 or 30 points from here, and then look higher. And don't forget, when we look at how big this level is, like why I think you'd want to be a seller up there at the 27.60 area, is this is the parallel. This starts all the way back in 2011 that was so important for so long, right? That's up there too, okay? Really, really, really important. Is it the 618 too? It's a little above the 618. 618's 2744. Okay, moving on to gold. So gold absolutely demolished yesterday as the dollar took off again. And to me, this is looking fairly mature. I do have some issues with it, I guess. 1, 2, 3, 4, and then this is your 2, 4 line, right? Extend that off of 3, and if you are going to make a low, then it's going to be on that parallel to the 2, 4 line, which in this case is going to be down near 1280 or so, depending on when you get there, right? The problem with this is twofold. One, this is the most extreme rate of change in the whole thing, right? And that's in the 5th wave, and usually it's in the 3rd wave. That's not a complete deal breaker. It just kind of decreases my confidence in that, you know, in that interpretation. And the other is that I don't really have anything at 1280, really, right? I mean, I guess you could look at the high from March of 2016. That's kind of stretching it. Like, you know, to me, the 1295 area was really important. That was the high from April of last year and June of last year. So I would take, you know, a approach that I usually take here, and that is I wouldn't just be buying into, you know, 1282, right? I would be looking to, if you did get a low at 1282 and then you reversed and then you got back above 1295, then I would say, well, now you have a tradable low in place at 1280, right? Until then, I really think it's dangerous to try to buy into 1280 because if you get down below this channel, something else is going on, and then there's nothing in terms of support until probably this parallel here, which would be high 1260s, 1267 or so. All right. So do not get caught trying to buy a low, or if you're going to do it, you know, if you're going to catch the falling knife or try to catch the falling knife, at least have some really tight stops in there, or look for some short-term reversal like 10-minute bars or something like that. But that was my thinking in terms of gold. Silver, I've really got nothing on the books there. It's still just a freaking dead range, and more and more looking like, you know, risk of just a complete washout to the downside again. But, you know, silver's holding up better than gold, which is kind of strange. You've got the new low in gold, and obviously you don't have a new low in silver. So if you're looking for something to hang your hat on as a metal bull, then I guess that would be it. But again, that's certainly not a trade, and the market's not really acting that great. So I wouldn't spend too much time looking at this right now. All right, let's look at the commodity currencies. Commodity currencies, Aussie and Kiwi in particular, very interesting to me at the moment. So on Sunday, we did have this chart. Aussie's at a really big spot, right? It's actually at the spot for 2 weeks. Might be trying to make a low down here and get back up into that 76, 50, 60 area, which is the underside of the 2016 trend line. You are getting some action today on Aussie down here, right? So if you look at, this is that line right here, by the way, on the daily chart. You can see it here. If I make it, say, blue, it's the same line, right? It's that line. That was the line that was support in 2013 and 14. And, you know, arguably could be trying to base here for a move upwards into the underside of that line. So that would give us a perfect measured move, actually, of not measured, but a 618 move of this up to 76.52, which puts you right up there, okay? So pay attention to, if you get a little bit of risk off here into the levels I was talking about on the S&P, then and we can hold. And I think there might be a shot at buying the Australian dollar for a move up into this level. Okay, you do have a promising rally off the low, although the decline here into yesterday's low is not anything like a three-wave drop. But you have held support. You can see the square root level here, and then again, this is the most important level, this line. So there's something to work with on the Australian dollar here. Pretty frustrating with the Aussie, right? Had the right idea in shorting strength, but was a day early and ended up, and then had an order to short it again and was never triggered. So it's been that kind of a year for me so far, but we'll continue to march forward and see what we can do here with the rest of 2018. So this is my thought process, right? I think that we've come into support. I think we've trying to base a little bit, and I actually think that there is something there for the Australian dollar. We'll just see how the rest of the day plays out, and then take a picture maybe at the short-term chart and see if there's an entry going into tomorrow. Okay. Kiwi dollar. Here's another, this is a great example of the channel playing out, right? So again, here's the channel. Draw your high from the February high, and then of course the April high. And that whole distance, if you expand it downwards, you're going to get the exact level that we just hit, okay? Let me do it for you on TradingView so you can see what I'm talking about. Okay, so we're going to draw this guy in right here, and that would be the 3. So you can see here on TradingView it's a 3, but you see how that works, right? Here's your channel. Here's halfway down, which actually was support and then resistance on, I guess, 5/11. What was that? That was Friday. And today and yesterday, you hit the exact complete width. So this could be a pretty big low for the New Zealand dollar, okay? You've also got, by the way, if you were to draw in your measured move from this entire range, so the 71.53 to 74.37 range, that measurement is 68.69. That's also been hit, okay? And then scrolling back, go to the other chart for this one, but scrolling back, you've also got for the New Zealand dollar, you can see these highs back here, this low right here, well, that was in December of 2016. You've hit that level as well. So there's horizontal levels here. There's all kinds of slope levels here. There's channel stuff. There's measured moves. There's just a lot going on for the New Zealand dollar. And then, of course, you've got the even longer term stuff, which is right here. This is the parallel from the really long term fork, where you've seen kind of a, maybe not exactly on it all the time, but you've had a lot of, some important resistance up here. This was February 2017. He actually had a perfect low on there in August. Consolidation, the breakout. Actually, this was the very beginning of the year, and now here we are again. And by the way, we are making a J spike today on the New Zealand dollar. So New Zealand dollar for me would probably be the next possible trade on the long side. If I go to an intraday chart for Kiwi, let's see if we can get support, a higher low here, maybe on a 618 move, right? Pay attention to 68.76. And finally, you've got a channel to look at here as well. So you can, look for 78.76 support on Kiwi, and then if you can break out through the top of this channel, you would have the end of a, kind of an ending wedge here, in which you would look to take it up towards the beginning of that wedge near 70.50. Okay. So that's Kiwi. Kiwi, I think, is the best look at this point to fade this dollar move. But again, do need to see it try to find some support first, down near 68.76. Dollar CAD had the long, it just is not acting right. I mean, the move you need to find support on that month open. We need to get going. It didn't do it. From here, I don't have hardly any opinion on the Canadian dollar right here. You've got to, we're above really good trend line. This is the trend line from 2012 that we've talked about forever. And we did find support on there. I guess that was Friday. Big move up yesterday, closed below the 29 or 28.90 level, which was a spot from high volume levels, and now we've come off again. So look, I don't have a trade idea here at the moment. If you were to drop a little more, 2 legs down, 26.60 would actually be in line with the 200-day average. So just something to be aware of. But again, I don't have a strong opinion on dollar CAD at the moment on either side. So moving on to crude oil. First, let's look at the long-term chart. This is the 2008-2013 trend line. You can see the parallel that was support back in 2013 and 14. That line is, we talked about this one last week, but we're still kind of consolidating, getting close to it. That line's going to be, essentially 72.70 now. It was a little higher last week, but it looks like we're kind of recoiling for another run. And the 73.29 area, that's the low from November 2014. So we're still looking towards that. And if we look at the hourly chart, we had a 1, 2, 3. This might all be working on a 4, right? Maybe that's your 4. Either way, looking for that final push in crude oil to a 5, okay? And you've come into support now, by the way. Initially, I was thinking that you'd have support closer to here, but that doesn't look like that's going to happen. So this could end up as a triangle. You can see this is a 3-wave down, this is a 3-wave up, and you're consolidating. So you could have a triangle, in crude oil before you burst to the upside. And that actually should help in getting us our final measured move. And that measured move on the triangle is 73.48. That is really close, obviously, to 73.29. So, coiling, one more push, whether it is this week or next, and then you'd be looking for a top, okay? And I know the Canadian dollar and crude oil haven't necessarily been moving together for quite a long time, but, these relationships, they come and go, and it will come back in line at some point. I feel like probably many have given up on it completely, so I would be, not 100% dismissive of it at this point. And, if we do get this push, maybe you do get dollar CAD back into 26.60 in the 200-day, and then maybe it's a buy on dollar CAD, and maybe it's a sell on crude oil, right? Or maybe it's a buy on a CAD cross or a short on CAD yen, right? And then a sell on crude oil or something. So that is my overview for now and what I'm looking at in terms of the majors and the major commodities and the stock indices, right? We've gone through most everything I've got to look at and share. In terms of, say, other indices, this is the DAX. It's gone through where I thought it would. So, I was looking for us to stop on the median line, which we did for like a day on April or on May 2nd, and now we've gone higher and consolidated. So, in terms of this, I would just follow this channel, if you were consolidating above this level. So you might want to look a little bit higher. Weekly reversal level is 300 points higher, right? Draw a horizontal line on that. So other than that, I would love to just take some questions, and I already have one from Mahai. He says, we have time, can we look at Apple? Yeah, absolutely. So let's take a look at Apple. All right, so this is a really long-term chart. This is the 1998-2003 trend line, and you can see all the parallels on it, right? Blue parallel, support, and then the red parallel, resistance, and that's going to be actually pretty high. It's going to be like 210 at this point. Mahai says it's very well correlated with this mania. Thank you. Yeah, absolutely. So that would be a level that I'd mark down as a long-term spot on Apple. Shorter term, I'm simply following this channel, which goes back to, I guess it's May of 2016. And you can see if you just draw that trend line, right? Here and here, you're going to hit the low here. Right before earnings, you had support, literally a couple ticks above it. And this is that same red line, by the way, which, that's the same one that we just looked at, but that's going to be upwards of where you would have the channel equal, to the highs here as well. That's going to be up near, again, that 210 area, okay? So if this wants to go full cray on the upside, then that's fine. As far as support's concerned, pretty simple. You can see the center line here crosses through support in September and October. It was even resistance for a little bit back in March, back in April. And that's going to be basically on the old highs. So that's 183-ish, right? And if what did we? This is the Apple's the largest company in the world, so they have quite a influence on the indices, of course. But do you remember our S&Ps? What we talked? Oh, excuse me. What we talked about with the levels on the S&Ps? We were talking about maybe. Right back on the highs here, I guess, on the S&Ps are pretty close. We were talking about 2680 and then up to 2759. So if you got something in Apple, like a little pullback here, and you got the S&P pullback, maybe you get the 183 and then 210, right? But following the channel, that is my story with Apple. So I hope that helps. Those are the levels to know. Euro yen, says Kelly. Sure. Let's actually, why don't we just look at some yen crosses? Okay, so euro yen. Do we have what's a possible massive head and shoulders here, right? This is shoulder, head, shoulder, and then we have the channel from the channel from the highs, if you just, draw your simple channel here, and you did, it's not precise, it's not perfect, right? I prefer the perfect stuff, but that rarely happens. And remember, we were looking at resistance on this line. You did get above it, so again, not perfect, but I would say, what is the 130.50 area? That could be your resistance in euro yen. That's week open. It's also a square root level. So 130.50 would be a spot to look at for resistance over the next, this week for euro yen. And then I would look lower, although I would actually probably just be targeting the 128 area, 127.90-ish area. That is the neckline. Okay. It's also the center. It's also the center of the channel that, if you draw it from back in July of 2016, extend off the high from December 2016. So it's the top of the channel or the middle of the channel for that 2016 year, right? And the top of that channel, you can see it's been resistance. It was resistance recently. So I'd be looking for that level to, do some damage, and it is going to be down pretty close to the neckline, which I don't know if you can see it because it's in a dotted fashion, but maybe you can see it now, right? That's going to be down around 128 actually, if you get down into that region. So, and that's of course going to be close to the low here from August of 2017. It's going to be close to resistance in the high actually from April and March of 2016. So, 130.50 for resistance, take it down maybe into 27.80. This might be a way to try to catch the tail end of maybe this euro, destruction on the downside, right? If euro wants to continue to destroy itself and go, down into the 115.60s, but first 117, then this might be something to look at for that. But hope that does help you, Kelly, with euro yen. Let's look at some other yen pairs. CAD yen's been one that we were kind of following for a little bit. It continues to just trade on this parallel. We actually had done a pretty good job of identifying the low back in March, and then you have what I think is a 5-wave move up, but what's happening here is you're not getting any we're not really pulling back. So what you got to respect is maybe this is again, this is how confusing everything is right now to me. Like, being a third wave higher, but that makes like 0 sense as far as euro yen rolling over, and doesn't really make a whole lot of sense either with the Nikkei going into one final push and then rolling over. So let me just give you some levels on this. So if we draw the shorter term channel on CAD yen, you can probably do more like this. Yes, that would be better. Continuing to kind of fail on this area, right? And if we were to come off a little bit, then I would just be aware of the 4-hour chart and the 200 period average on it, which you can see was actually support back here. That was last week that was last Thursday when you had the announcement about the New York Times saying that Trump wasn't going to pull out of the Iranian sanctions, and of course he did, and it completely reversed. But yeah, either way, does look like you have something to work with here because the center line continues to do work. I would look at this trend line as being one to pay attention to if you get down to it, and it's going to be right on 84.75. Okay, so you pull back into that, then I would look for maybe a long position and to try to get at least a bounce, but maybe with a broader uptrend. Again, just trying to go by levels here. Pound yen is one we looked at actually very early this week, and this was my thought process with pound yen early in the week, right? The 1, 2, 3, 4, and then looking for a low 5. Again, it's getting a little long in the tooth for that to happen at this point. Broadly speaking, you do have, simply channel support down here. Maybe one more little stinger and then a reversal higher in pound yen. You can kind of see as I'm for the next couple of days at least, I would lean towards, looking for opportunities to buy pound yen, but opportunities to sell euro yen. Okay, that would make euro pound obviously a natural possibility, but for the yen crosses, if we're going to fail here a little bit, right, come off this major level, then euro yen's probably going to be the place to be. If I'm completely wrong that dollar yen is not at major resistance and that it's going to break through it, then maybe pound yen is the place to be, or even CAD yen is the place to be, right? So again, not a lot of uniform clarity, if you will, across the spectrum in terms of, say, all yen crosses are in this, or all are in that, or all dollar pairs are in this, or all are in that. They're kind of all over the place here, and correlations have broken down. So I'll leave it at that, right? But at the end of the day, we just simply have to try to identify the levels within trends and trade with those trends on those levels, right? Okay, so hope all of that helps. Things will clear up here sooner rather than later. I'm sure they always do, and we will have massive pips coming our way. All right, so I'm going to leave it there. Thank you all for your time as always, and I'll get this archived ASAP, and I hope you have a great rest of your week and weekend. All right, and if there's any mothers out there, by the way, let me give you a belated Happy Mother's Day, and I hope that your children and everything were wonderful to you. All right, take care.